So this is a subject that's near and dear to my heart as a person who's an aspiring venture capitalist. I run a fintech incubator program, work with early stage companies, and we'll be raising our first fund starting in September, which is right around the corner. But today let's talk to a real VC. So you laugh.
I do laugh at that.
Yeah. Well, Greg, tell us about yourself and tell us a little bit about your journey. Like, how did you get to this place in your life?
Sure. So started out in the music entertainment business, then jumped into tech, and the first startup that I was with was Amazon back in the 90s. So that's when it felt like a startup, and that was sort of my path into the early 2000s, and then one startup in technology after another. So everything from image recognition and then mobile, and I sort of watched the trend happen. I was lucky enough to be around to see the internet go and then watch mobile go. Fast forward to about 2 years ago, started watching what was happening with blockchain and with Bitcoin specifically, and that's when I sort of got the bug. So,
okay, so it's depending on who you talk to, it's always kind of like a different. A lot of people talk about this like kind of almost like aha moment. They read the Bitcoin white paper and their life was changed or something, and you hear the word rabbit hole. It sounds like yours was more of an evolution based on experience, watching different tech trends. Is that correct? Does that kind of add up?
Yeah, I think so. I've always sort of been attracted to the latest technology of what's out there. So again, whether it was coming from those different paths of structure of where I was, but then certainly seeing what could happen in the power of the blockchain, and certainly watching the crypto space go. And then I was fortunate enough to be introduced to a company called Archain here in Seattle, which is a third generation blockchain platform that's set to launch here pretty quickly. My partners and I, one of them is in the back of the room, Steve back there. We were asked to come in and raise the funds for Archain. So we did that about a year ago, about a year and a half ago we started. We did a private token sale. We raised those funds. So we were fortunate enough over that 6-month period, I think they ended up with about $55 million in treasury. We did that all through a very small community group. And what we understood from that was the need for that platform to have DApps that were running, and so hence that brought forward the need for a fund, and we talked to them about setting up a venture fund, and we were granted that fund in January of this year is when the fund started.
Okay. It sounds a little bit unconventional to the way that general venture funds are formed, right?
Yeah, very much so. And we try to do everything different. There's not a lot that I like to say that I'm common with venture capitalists. So if we can figure out a new word for that, we certainly will. But when we started in January, our mission was that we were going to invest in 12 companies in the first year. We were going to make sure that they were all built on the Archain platform. There's a few other things that we're going to do. Move ahead about 6.5 or 7 months to where we are today. We've invested in 22 companies to date. Each one of those range somewhere between $300,000 and $3 million is about what we put into those companies. They're not all local. I think we've got 3 of them that are here to the northwest. We've got 2 in Europe, and I think 2 in Africa, and the rest are sort of across the country. So we go very broad as well. We certainly don't just look for one vertical. It's too early to do that.
Okay, so let's break that down in a few different pieces.
Sure.
So let's see. So what do these investments look like, right? Are you investing in a token? Is it an equity? Is it a combination?
Yeah, so we don't look for just one version or another. Most of us are traditional finance guys, so we sort of lean back on traditional things. We want to see equity on some of the deals, but there's also tokens on others. We've done combinations as well. Of those 22 companies, I think we've had 2 that have gone ICO or a token sale. And when we do invest, we try to keep it as simple as we can. So there's a lot of differences between us and a traditional venture firm. So one of those big differences is that we ask that you engage in a strategic partnership agreement with us. By engaging in that means there's sort of a give and take. So you're going to do X in exchange for Y, and sometimes that's money or that's tokens, whatever that might be. And we ask for a board seat, and so we're very involved. So we do a lot of early stage sort of incubation as well with the companies. Our offices, we just opened them down in Pioneer Square, so it's a great space for our portfolio companies to come, and we help them on the legal side of things. One of my partners is a securities attorney, so that helps us out quite a bit to have him on board. And then we help on the marketing and everything else along the.
So do you have any kind of thesis or ideas around, I mean, fundamentally, like, you're kind of like a hybrid and a different kind of breed and maybe an evolution of venture capital, right? I mean, do you guys think about it that way, or did it just happen, right? Was that by design? Do you guys see something that...
I would say that is kind of by design. I mean, that's been something that I've shared with the partners and the team members. I mean, I remember too many times sitting in front of venture funds. I've sat in front of at least 100 different ones and gotten money from maybe 3 of them, right? So typical to what everybody else has seen. And there's not a lot of love there. And I saw that time and time again. And when we were able to get our own fund, we sort of all sat back and said, how can we do this different? How can they be non-traditional? And how can we treat those companies with a little bit different, more respect? We get to know very quickly. And then we try to help them as much as we can. So we went into this knowing that we wanted to be different. We feel like we have the latitude as well because of where the blockchain space is right now. And we feel like we can go a lot of different ways than some of the traditional venture companies that are out there.
Yeah, very, very interesting. So yeah, let's dive into your portfolio a little bit, right? So you're saying you're kind of spread globally. That's a little bit unconventional. And you're not kind of vertically focused, right? You're just based on primarily the thesis is around things that can be built on our chain, right?
That's correct.
So
that's correct. So
how do you put parameters around an investment thesis?
Right. When you come to us, we ask that you're going to eventually be on the our chain platform, and our chain is going to launch towards the end of this year. So testnet comes out in about 2 weeks. They're ready to go. We're already running smart contracts on there, so we're quite a ways ahead of the pace. But certainly, if there's companies out there that are building on Ethereum or wherever they are right now, we welcome them. Our belief is that they're going to see the differences with our chain and they're going to eventually port over. For what we look at, we have a team. There's 9 of us total in the company. We've got offices in New York, San Francisco, and then here. And so the team is really focused on finding, one, what's going to drive the most transaction volume to the blockchain. We also look for me personally, I go after a lot of consumer plays. So we've invested in music, in media, commodities and oil trading, clean energy, all across the board. There's not one specific vertical that we're looking at. So we're wide open. I would guess that that's going to narrow in the next 6 to 12 months when we see more categories and more things that we're looking for. But right now, it's too wide open.
So interesting. So tell us about your vetting and deal flow process. Like, what's that look like for you guys? Like, is it all inbound? Are you guys hunting? Do you guys see projects that are good candidates?
That's an interesting question. At the beginning, we were terrified that we weren't going to get enough deal flow. I think I didn't know how much was out there as far as DApp developers and what was going to happen in the blockchain space. And then we started attending some conferences, put up the website, and now the team has looked at well over 400 deals in the last 6 to 7 months. It's probably north of. I mean, those are the ones that they actually bring into the office and we start going through. So it's probably way, way up from there. And to get down to those 22. So our process, we try to go quickly. We try to work in weeks, not months, like traditional VCs. I think the team is sharp enough that they can dig in and they go through that diligence process very quickly. And then it's very standard to how you've seen other deal flow. So, tactfully, they bring a deal in, they come to the Wednesday meetings, we look at it, we process, we go through it, we go through diligence, which we can usually do in a matter of a couple of weeks, and then it goes into the legal side, and then they're out the door, and they can be funded in as quick as 30 or 60 days. It doesn't take long at all.
Excellent. So you kind of keep alluding to kind of the advantages of kind of your model or who you guys are compared to conventional VCs. So how do you view conventional VC? Like partners, competitors? What's the both depending on the firm?
I have to be careful because I do have some friends that are traditional VCs. No,
of course you do. That's a standard. Right?
Yeah, we will certainly partner up with them.
Yeah.
We tend to lean more towards the progressive side of the VCs, and certainly the ones that are looking in the blockchain space. I've talked to almost all the traditional VCs here in the Seattle area, and no offense to them, but they're way behind. I try to coach them and tell them, look, guys, there's something that is happening, and some of them just don't move, and it's frustrating to see that. But that's their loss, not mine. So we just try to do our own thing and go down our own path.
I just gonna say personally, like getting connected with you, like made me want to move back to Washington State because it's like I left, I managed helped manage the Spokane Angel Alliance prior to leaving, and realized that it was kind of a dead end as far as a career. That if I wanted to be in this space, I had to spend a period of time in the Bay Area, and so I've put in my time. I don't know how much more time I've got to put in, but then you come back here and you realize, there's effectively six-ish, I don't know how many venture firms there are these days, but the ones that I know. How
many that are relevant, right?
Yeah, exactly. There's probably, dozens, but it feels like, and it's similar to Spokane, but a little bit like, times it by 6 or something, right? So once you've knocked on all 6 of those doors, sometimes for a company that's not able to, raise globally or in the Bay, right? That's just kind of the end of the road. So
Yeah, it is. I mean, the running joke always, and this is before I jumped into this space, was always use Seattle sort of as your practice ground and then head down to the Bay because you're not going to get the funding here as quickly or as efficiently as you would want to. And I know a lot of companies are still feeling that. Nothing against the venture firms that are here. Some of them are doing some great work, but everybody seems, and that's, we've made our trips out to Boston as well. We're hearing the exact same thing in that market. They're so afraid of everybody leaving to go to the Bay Area to find funding or to start the company. So one thing that we're trying to do, we really, really want to build a hub here in Seattle. We believe that there's no reason, sort of the whole, as Seahawk fans, as Russell Wilson says, why not us? Like, why can't Seattle and the Northwest be a hub for blockchain with all the technology and what we've done? And we're trying to start that, and we are working with as many companies as we can. So we want to be more locally focused, but certainly we want to let this creep into the ecosystem for what's happening here in Seattle.
Yeah, well, let's talk about the assets of this market, right? So what are the opportunities? What's the reason why a person should start or keep or maybe even transplant their company to Seattle?
Yeah, I think, I mean, there's some pretty good software companies that have started here, right? There's a couple of retailers that have started out of here. So,
a couple good startups.
Yeah, if we can start to get those folks to leave those companies to start and to do what I'm seeing happening.
I don't know if we can dissect this in this panel, but there's an interesting thing, right? Some of obviously the biggest companies in the world are here, right?
Correct.
But they don't have the startup ecosystem that we have in the Bay Area, right?
That's true.
For some reason, there's no, like Google's, all these other, Apple's, like go down the list. There's just a different culture where people spin off those companies. They either start venture funds, they start other companies, and there's this cycle, right? Mm-hmm. And it just, for some odd reason, it doesn't exist here. And I don't know who's going to crack that nut, but it can happen here. It should happen here.
It should. And I think we've been talking about it for years as to what that problem is. And does it start with, the University of Washington, I feel like, is finally starting to sort of get some ground there. And I think it starts with the institutions and we've had our battles trying to get into those guys. And then I think it goes to, is there capital here for when those folks want to leave Amazon or Expedia or Zillow or wherever they are to start something up? Or is there a bunch of guys like me that say practice here and then go down to the valley because there isn't an ecosystem to support them? I think all of that can and should and will eventually go away with what we're starting and what we can do with this industry specifically to the blockchain. I really do believe that.
Excellent. Okay, so I know that at least, I mean, in many communities, universities can be a backbone or can be a supporting piece. In the Bay Area, Stanford's, just kind of a factory for entrepreneurship. Berkeley as well. So what do you seeing out of UW? What are the other schools?
No,
there's at least a half dozen decent, really good schools in in your backyard. How do you guys? I mean, this isn't your problem to solve, but I mean, how can they support?
No, I mean, we believe heavily in the institutions that are out there. So one of our first investments that we made was at Berkeley with the blockchain group at Berkeley. Then we took that and we've done it with MIT. We've done it with Harvard. We're working with the University of Washington right now. So we believe in getting those institutions set up, and specifically on the blockchain side of things, right? And we even push them further to get curriculum into what the academia says and what the students are learning. So we're working on that level. As far as what's happening here in Washington, we're starting the conversations up and down the coast, if you will, for the universities, but we've gone after the big ones first, so I think Michigan is next on the list. It's impressive when you have a list like Berkeley and Harvard and MIT and then add UW, and you'll start to see some flow that's happening there. And we're participating at the level to get those students involved and bring them in. That's really where we see that.
Yeah, well, I think there's different perspective on different markets, right? So I think in more conventional, I mean, just basically once you get outside of the Bay Area, right, most people want, seasoned entrepreneurs, they want to invest in them when they're second or third, they want to see their track record.
Sure.
Whereas I used to work for Tim Draper, and that guy wants to invest in like 12-year-olds if he could or something. So it's like,
right.
It's like the earlier the better. So it's like, I think there's just a really different mentality of risk taking. I mean, the way that kind of seed that got planted in my head is that, when DFJ analyzed their portfolio, they realized that it wasn't, the entrepreneurs that went off and, made them money were the ones they invested in, and it was like almost 3 businesses later that they made them, basically returned the fund. Mm-hmm. I mean, are there any parameters you put around age or experience?
No,
or just open and agnostic to that?
No, I mean the most interesting story was some of the partners and I were in Boston and we're meeting with a group out of Harvard. They're still students at Harvard. Their advisors were there. We were talking about making an investment in them. We eventually did. I felt a little bit guilty about that, quite frankly, because they're still in school, and the advisors were like, no, it's time for them to go, drop out of Harvard and do it. I mean, that's a true story, and they can always come back, and you can take either side of that, but I'm telling you that group and what they've done in just, I think, 2 months we've been into them, I've seen more out of them and more energy out of that group than it's comparable to anybody that we've done.
The risk aversion and the different ideas are really different.
It is. So I feel really good about where the future is heading, quite frankly.
I think there could be two sides to that coin, because I think Silicon Valley kind of has a bias towards the older entrepreneur, right? So I see some people coming through and I'm like,
yeah.
They're looking for the next Zuckerberg, and they're going to bet on 100 wrong guys looking for him, or 1,000.
That's true. There's nothing wrong with having adults in the room. I mean, we certainly have been attracted to the
industry as a whole could use a few more adults.
Yeah, it feels like, to me anyway, from what I've seen, I've either seen them go on the extreme young side, or else they're seasoned, they've been through it, and so we have a good mix of both.
Excellent. So it sounds like you're investing across verticals, across age groups.
Everywhere.
You're hitting it all.
Yeah, we look for good deals.
So I think the having the open mindset is helpful.
Yep, for sure.
Gives you okay. So let's maybe go back a step. So a year ago, we were kind of facilitating this conversation. I run an incubator, accelerator. I kind of play in that space, and we have a lot of these venture capital, VC type investment panels. And it was kind of the opposite of the ICO panel earlier today. The doom and gloom, right? It was like, well, our ICO is going to replace venture capital, right? Is this the end of the 500 startups, right? And so, any thoughts on that? And then we're a year later, right? So it'll be interesting to kind of hear your perspective now that we've matured a bit. Yeah.
Well, you mentioned like Draper earlier, like who's been more progressive from a traditional funding side or finance side than Draper and what they're doing. I'm not a big fan of I don't think any of us believe in the ICOs. Like, this is the time to do that right now. Just where we are. But overall, if you look back to the past year, I think funding and the resources, they're going to get flipped on their head. And I think we're a small case of starting that process. I think the folks that we see that come to us when we talk to them and then they go and talk to somebody traditional, they see an immediate difference. And I think that's not just about Reflective Ventures and what we're doing, but I think that's about the space in general. And again, I used it earlier, I think we have the latitude to do that because of the space that we sit in. Whenever we're talking to the younger companies to come out and they ask about, hey, should we go ICO? Should we go back to traditional funding and financing. Like, take your time, take a deep breath. Do you really want to do that yet? And then really figure out what the path is. And I think that's partly why you've seen we've only had 2 ICOs that have happened out of the 22 so far. Most of them are set to go, if they're going to do it, in the last quarter or the first quarter of next year. So a little bit of patience there.
Excellent. Yeah, a year ago it seemed to be the solution to everything. So, and not just ICO, but it's blockchain in general. So I've kind of made the joke that if I were to fall down a flight of stairs in San Francisco, when I'd get up or maybe not get up, there'd be someone standing there at the base, and instead of offering me a bandage or a hand up, they'd be offering me blockchain, right? So we know it's not the solution to everything, and I think it's the same for ICOs, right? It's not a one size fits all, right? For some companies, it's important for them to raise large sums of money quickly and scale quickly. Others, it's kind of the death of their company. So I think it's really important to, really think about what it means to raise capital through that funding mechanism. With that said, when someone's approaching you, what's the advice when they're coming to Reflective Ventures as a whole, right? Like what's just channels? How do they get you? How do they get a hold of you? What are you looking for? How does one stand out?
Yeah, so we're easy to find. So it's just reflectiveventures.io. There's 9 of us that they can find. We're at most of the events, certainly locally, and we've been in Asia. We're going to be in Europe. We're all over the place. So while we're seeking the deals, we're getting pretty selective on what we see. I've been actually pretty excited and surprised actually at the types of deals that are coming through. Certainly, and maybe the team is taking off all the crap that starts at the top before it comes through. I don't know, but it's not
definitely one of the challenges, right? There's a lot of chaff.
Yeah, there is. There's don't put stuffed animals on the blockchain, right? You can't. That's probably somebody probably has done that. Maybe you can make a model out of that.
Crypto kitties could arguably be stuffed animals, digital stuffed animals. But anyways, I know what you're saying.
Yeah. So for us, obviously, it has to run on blockchain. Then we look at again like the transaction volume and what it's going to do specifically for our chain in our case. And what it's going to do for the ecosystem as well. And if it does make sense, that's one of my partners' first question is like, how is it going to work on the blockchain? Like, tell me how this is different, and how are you using the blockchain as an advantage? And if they can't answer that question, they don't get funded. It's as simple as that. And I think there's the buzzwords are too high. There's too many of them out there, and too many companies are trying to come on. I actually see that sort of balancing out a little bit more, and I think we will continue to see that for the next 6 to 9 months.
Excellent. Okay, well, before I open it up to questions, is there any other advice that you would give to an entrepreneur in general, or especially a blockchain entrepreneur?
Yeah, I would just stick with it, and things change so fast in this market. We've talked about this earlier, right? Like it kind of works in dog years, and things move so progressively fast that you got to stay on top of it, and it's never too late for companies to get in or folks to get into this space to see where it is. I think as more platforms come online, like in our chain, and more tool sets are there, I think we're going to see more. So I would wait it out and see to make sure it's exactly right for you. I wouldn't go after it as, hey, I'm going to drop an ICO and make a ton of money at this. I would get fundamentally sound on what your financials and your go-to-market strategy is, just like you would have done 5 years ago.
Or 3 years ago, or 2.
Yeah, right.
So things in my world, and probably I would see if you agree with this, they've come kind of full circle, right? So it's like last year, people were raising hundreds of million, or let's say $100 million on a white paper, right? It feels like those days, and for the better, are gone, right?
Yep. Yeah, I think so. I think maybe they will come back. It reminds me of what was happening in the late 90s and early 2000s, right? With all the IPOs and everything that was happening, and it sort of comes back down, and then you get left with some great platforms and some great technology. We all have to remember what came out of the garbage of the late 90s and 2000 and what we're building on now, and I think the same thing's going to happen with blockchain.
Okay. Well, you got me thinking about one more question. So when I was in China, they kept asking the question, are IPOs still relevant?
Yeah, I think they can be. I think we've seen it in our own neighborhood here to see what some of those companies have done, and certainly some of the tech companies here in Seattle. I haven't been a part of any in the blockchain space. We've talked about combining ICO, IPO. Like that's a very non-traditional sort of fun. And if you think through that, it gets pretty interesting. But no, I don't think IPOs are dead. No.
Okay, interesting. Yeah, different perspectives on it. My perspective was that I don't think that people, at least in Silicon Valley, are really aspiring to that like they used to. It just seems so far out, and there's so many different kind of mechanisms, whether it's, you know.
Yeah, I guess let me backtail. I've never been a big fan of a company coming to me and saying that their eventual exit is an IPO, because that's like 3% of all the companies get there. So I discounted that. But
in China, the holy grail, especially if you're on the U.S. stock market. So we met a NASDAQ-based company, and it was like that guy was a god. And so I thought I had a hard time telling them that, you know, that's not what we aspire to, at least in the startup community that I live in.
Not at all. Not at all.
Yeah. Okay. Well, I'm sure we could go on forever, but I want to make sure we make some time for some questions. Any questions from the audience? Such as what is Greg's email address and how can I get some money from him?
Talk to the guy in the green shirt back there.
In the back.
That's what you
Excellent.
do.
Okay, we must have bored you guys to death, so this was just fun for me. Okay, any questions before I let Greg go here? Nope, there we go.
Do you guys have plans to get on Binance or Bittrex?
Question was, do we have plans to get on Binance or Bittrex? It's funny you should ask that. My partner and I were just talking about that. Yes, we do. With the RChain platform, we do.
Excellent. Any other questions? So my question is, where did you go to college?
I went to WSU.
I know that. Okay,
I
so
am a
fellow
Coug.
Coug. So I know we're not in Cougar land, but we're way more in Cougar land than we ever are when I'm in the Bay. So I was on a panel just this last week, and they were going, "Go Bears" about Cal, and I was like, I can't wait to come up to Washington State. So excellent. On that note, go Cougs, and thanks so much, Greg.
All right, thank you.